Minutes seem to suggest rate hike in September, and another one's coming in December. Accurate reading of the minutes, and does Esther George agree with that view?
So I agree that the economy's doing well, and based on what I see today, I think 2 more rate hikes this year could be appropriate. But I also am mindful that's not a commitment, that each meeting you have to reassess and understand what are you seeing in the data, what are you hearing from your constituents that you talk to, and make the decision at that time. So hopefully everything holds together as we get to the end of the year.
Would you say that's the committee has coalesced around that view now? Is that a strong consensus?
So I think if you look at the dot plot, which the committee puts out, you read the minutes, you read the statement that's come out, it would suggest that there is a degree of consensus around the state of the economy. But obviously within that committee, you are going to get differences on how many rate hikes are appropriate at this stage.
Earlier in the year, you were worried about the pace of growth and inflation picking up, concern that Fed policy might have to move faster. Has that earlier in the year view, is that what you're expressing now, or do you think this is going to have to pick up even more when we get into 2019?
So based on what we see today, I don't think the performance of the economy that we've seen and the way inflation has performed is argued for going faster or fundamentally changing the course. But I think an upside risk would be that we have pro-cyclical fiscal policy happening at a time when we have accommodative monetary policy. And so we have to watch that risk and see how that unfolds.
When you think about dots, have you penciled in a number of rate hikes for 2019 yet?
Well, I'm obligated to pencil in a number of rate hikes. Whether those will come about, it's always harder, as you know. I can see maybe the next quarter or the next two. Looking into 2019 will be a function of whether this economy continues to perform as we see it now.
Do you have an estimate you'd like to share with us?
So I could see if getting back to somewhere in the neighborhood of a 3% neutral rate, which is how I think about the long run neutral rate, would suggest that we need to make several more moves next year too.
Okay. I'm glad you raised the question of the neutral rate, because there seems to be a very interesting discussion within the FOMC now, not just about where the neutral rate is, but how you use it. Do you get to neutral, your view of neutral, and stop, or do you say, got to go a bit further and make sure we don't have an inflation issue?
Yeah, so this will be a big challenge for the committee. I call it threading the needle, which is we've arrived at a point where it will be important to judge whether our policy is restrictive or still accommodative, and that will be a function of looking at the data increasingly. And it's why it makes it hard. This is not an observable benchmark. If we could see it, then we could be more clear about where that is. So I look to the consensus view, the median view in that forecast to see people are coalescing somewhere around 2.5 to 3. And we have to just be conscious that that policy operates with a lag, and to see how inflation, employment, growth in the economy unfolds.
So would you put yourself in the camp that says, when we get to 3%, I'm ready to pause and see what happens next?
So I don't know if it'll even be 3%. We may see by the end of the year, depending on how the economy unfolds, that we should always evaluate that. So I take it a meeting by meeting approach, Kathleen, to really try to judge how far and how fast do we need to go.